Good afternoon, everyone. Thank you for joining us today. So this is an interesting one. So let me quickly start with a brief introduction. My name is Arpit. I'm head of ecosystem at Aethir. Aethir is one of the largest GPU marketplaces decentralized, with over 400,000 GPUs spread across 95 countries. So in this panel, we have esteemed guests, founders, and top leaders in the industry. Before we begin, I would like to give everybody an opportunity to introduce themselves and their projects, and then we dive into this interesting session.
Thank you. Hi, my name is Andrew Sobko. I'm the founder and CEO of Argentum AI. Argentum AI is the centralized marketplace for compute. And I like to kind of simplify it. Imagine you have a marketplace with over a million GPUs without owning a single GPU on your marketplace, or let's say owning on your balance sheet. And that's what Argentum AI is.
Um, Great to see you, everyone. YQ here, founder of AltLayer. So at AltLayer, we're providing these blockchain infrastructures for all different services, including this rollup AVS. And recently, we are also providing this decentralized AI infrastructure for a bunch of projects, including the infrastructure for X402 and also A004.
Okay. Hi, everyone. My name is Raj. I am the Chief Product Officer at IO.NET. IO.NET is one of the largest compute and AI infra providers in the Web3 and the Web2 space. And before joining IO, I used to work in Binance and before that at Uber. So, yeah, that's broadly about me.
That's great. Yeah, this is Jianshuo Wang. I'm the founder and CEO for Baixing AI. We work to build AI agents for small businesses based on the LLM.
Thank you, everyone. Today, really, we are at an inflection point, right? For decades, oil has been the true, reserve asset, and there has been, a lot of wealth built on oil. But we are seeing this major shift now, where we are seeing countries really aggressively building their sovereign AI projects, amassing GPUs in huge quantities. And we are also seeing a similar race in enterprises in big tech also, right? So where all the Metas and Apples and Microsofts of the world, they are amassing these GPU resources. So what is very clear is that there is an inherent value to GPU because it is being seen as the fundamental to the AI revolution that is coming in. So maybe just to build on that, so Andrew, we start with you. So with this premise, I think you work at the intersection of AI and finance, right? So the most fundamental question here is, why should GPU even be considered as a reserve asset?
Yeah, so number one, I would like to say, compute is clearly becoming like a foundational unit of economic productivity globally. If you look what kind of drove global markets and was basically pricing between labor, energy markets, and of course capital. And if you look into like what's the biggest bottleneck in let's say AI economy today, it's not really oil anymore. It's not labor, and again the companies and let's say the institutions that can solve compute at scale will be biggest beneficiaries of the GDP growth. We can see a simple example right now in US, right? The entire GDP growth over the last year has been driven only by the data center build out, 4%. So they will be the biggest beneficiaries. Now, if you look into, let's say, reserve currencies, right? What's been, again, kind of clear components of the reserve currency. It's about scarcity, it's about utility, and global demand. And today, compute clearly covers all three.
So I think let me give you some pushback on that, right? So there has been this assumption always that with AI complexity, GPU requirements will continue to rise, right? So there is this linearity between the GPU power and how complex you can make your AI models. But that is no longer true. Like DeepSeek came and in one day it kind of crashed that assumption to the ground. So when that happens, like, don't you think that rather than GPU, the real bottleneck here is the improvements in AI models, and once that hits, this might not be that important of an asset?
Again, we as a company, we clearly see that LLMs are very GPU hungry. We are not actually married just to LLMs, and we as a company, we are soon will be announcing a major competition called Project Saturn, where we're trying to bring some of the smartest engineers globally and try to build and develop the best AI model and could be LLM, could be small language model, could be quant-inspired model, or could be some new alien technology from 43rd century. We don't really care. We want simply the best model, and that's why we bring in thousands of developers globally into this competition, and again, should be announced very soon.
Okay.
So we're not married, again, to the most, let's say, GPU-hungry models today.
No, I think that's interesting that you need to stay agile, right? So maybe I move on to now YQ. So you have a keen focus on its scalable blockchain infra, right? So from your vantage point, how do you see decentralized compute changing the economics of AI at a scale?
So, so since last year, actually, I think 2 years ago, in blockchain or crypto space, right, we saw a lot of companies, like including like sort of Aethir, working on this decentralized training and inference, and also even data collection or labeling, this kind of approach, right? And the good thing is like we can see it provides a lot of transparency, and at the same time we can also onboard a lot of users for this kind of a decentralized cooperation, and can also give the users extra use if they provide the hardware, including GPU, and sometimes just the bare metal machines of your laptops. So that's something like I believe like sort of like innovation compared to this traditional AI. Like typically we put all the GPUs in the data center, and it's quite centralized. And for most of the time, it's a pure sort of this monopoly for the major either the GPU chip makers and or sometimes these big data centers. So I think that's a very cool experiment in the blockchain or crypto space. At least we bring some kind of decentralization and transparency, even extra use for users in this decentralized AI infrastructure space. So that's why, like, since like sort of 2 years ago, we've been providing this rollup and also this blockchain services for a bunch of these AI projects. Because for them, like, since there's a lot of customized requirements, like for these projects, for most of the time they couldn't just deploy a contract on a specific chain. For most of the time, they really want to customize the chain for their particular like sort of requirements. So that's something like we provide for the past 2 years. And then this year, we saw a clear sort of shift from this underlying decentralized AI infrastructure to more on this application side. For example, some new payment protocols and also these sort of new crypto AI agents on chain. So that's why, like, even on our service side, we are also trying to provide some new services. For example, these X4 to AO4, these infrastructure or even explorers for a lot of these new trading agents and also these new types of applications. But in general, like based on our observation, even for decentralized AI or this kind of a crypto AI space, it constantly changing for the landscape, along with all the new sort of innovations, either from the Web2 AI or like internally, even for blockchain or crypto AI. Internally, all the projects we are trying to figure out, okay, what's the best product market fit for this kind of a combination.
Yeah, no, I think that's interesting, and complexities at the infra level will definitely continue to increase the more decentralized we go, right? So maybe with that, I'll now move on to Raj. So Raj, we are in a similar space, right? So we are also building this decentralized GPU marketplace, and so are you. And I definitely see a lot of advantages, like structurally, between from centralized to decentralized systems. But again, just for the sake of making this easier to understand for everybody here. So maybe can you go deeper into the value propositions that IONET has over centralized competitors like AWS, Azure, and GCP, especially given the scale that they have already achieved?
Fair. So I think since this room has a lot of people who are into asset management, so I'll probably approach this answer from that side. Imagine if you have to create a data center today. There are typical 5 or 6 steps which you will have to do. So you will have to buy a land, you will have to give a purchase order to NVIDIA, you will have to sort water and electricity in that location, and then you will have 3 to 5 years for the data center to come into shape. Imagine the pace at which LLMs are changing within this year itself. Even if you imagine an output of your data center based on current projections, it's easily possible after 5 years that landscape would have changed. So that's the core issue with a lot of traditional providers today. Whether it's GCP, AWS, you do not have that much foresight to plan demand now in the future. Even if you try to have like a BD pipeline or potential clients and everything sorted, the landscape of LLMs, agents changes at a monthly basis now. How can you plan for 3 to 5 years in the future? So immediately, like my thought here is now compute is moving to that commodity kind of an angle, where even if you do not have compute in the data center of choice, you have compute available at a latent supply level globally. What I mean by that is, NVIDIA has been selling GPUs for so many years now. Those machines are out there. They're out there in Asia, they're out there in North America, they're out there in Europe. I feel the value accrual is now moving to the orchestration on top of this versus the standalone data center. And as this is moving into that layer, there will be a lot of risk sitting on traditional hyperscaler books now, which is debt from the data centers they're creating, debt from the data centers they have created and they have to service, and at the same time, the pressure to be innovative on the revenue and the BD side of things. Now, if you put in players like IO.NET or other deep in providers, there's no capex involvement here. It's pure tech and software layer which works on latent supply. We already know to a fact that there are a lot of crypto miners who sit on a lot of machines. We know there are a lot of enterprise data centers who are not able to sell their machines. So automatically, as soon as you create a marketplace of this, you have orchestration of this, you have a larger value accrual at your side. And I think that's the natural progression which we are seeing with decentralized compute. We call it decentralized compute, but it's more like a marketplace efficiency play where any machine anywhere can service any client anywhere. And it should service them in the lowest latency and highest throughput possibilities, what is required in most of the AI startups today. So any AI startup founder who's sitting in this room, they do not care where the machine is unless there's a regulatory compliance required. So you need the fastest and the cheapest machine available to you to service your users in the geo space wherever you are. And there's also another inherent problem with centralized players. How do you decide which country to build a data center in today? So even if you're seeing demand for something in US today, 5 years later, that could be in China, it could be in India. So how do you plan for capex of that nature, the trillions of dollars which is flowing in, when you do not even know where the demand will come from? So that's why I feel like this value accrual is moving to the orchestration of the software layer on top versus the standalone machines. So.
Yeah, no, I think that's right, and we have seen that movement happen across, different industries in last many years, right? So maybe I would love a builder's perspective from you, Jianshuo. So from a builder's lens, what is it that you are optimizing for right now? Like, does centralized versus decentralized really matter to you from a builder's perspective, and from a asset class perspective? Do you think decentralized compute inherently has advantages over centralized players?
Yeah, I come from engineering background. So I ran internet company for 20 years and now moving to the AI application layer. So from a computer, from an engineering perspective, it is pretty straightforward that we look at the whole internet system by identifying all the bottlenecks, all the critical resources, and see this whether the system stability. These are the most important things. So back to the compute and AI. For AI resources, it is not just the operational expense. It is something that I think there are two characteristics for this kind of resources. First is it is so mission critical. If there's no enough computing power, there's not enough GPU, then the system crash. There's no training, there's no inference. And this has to be continued. It's a continuous demand. It's just like power. You cannot stop it for like 2 seconds and then continue, right? At the same time, the computing power is so unpredictable. because it's not like a random computer or other resources. The supply is so constrained by NVIDIA's manufacturing power, and there's such a lead time. So it is so unpredictable, and the price is volatile. So if I face a system with these two characteristics, one is it's mission critical and it is unstable, predictable, we have to make sure we reserve it. Anything that's like this in the computer system, you have to back up. Like DNS, you have to have two caches, like a lot of the database connections, anything from the engineering's perspective is not it is not a narrative. It is an engineering reality. You have to face it. So that's why computing power is a new reserve asset. And back to your question about distributed versus centralized, it's the same. Anything that is distributed, anything that's centralized is so hard to control it. It can be the single point of failure in the future in case the price just goes to peak and there's nothing I can do for it. But if it is decentralized, there are so many nodes that can provide a similar, maybe not exactly the same, but similar computing power, then we can distribute the risk and increase the stability and the predictability of the system. So I would say the decentralized computing infrastructure will be the future, and will adding the financial layer and to it, we can add futures, we can add a lot of the financial instrument to this layer. We can make a much stable and scalable future.
No, I think the issue with centralized systems being prone to single points of failure, like that's very prominent, and we have seen multiple such instances in last few weeks only. So I'm not naming any names, but we have seen these things happen. So now moving on to the next section of this discussion, right? So uh, so compute is it's a infra, right? And if I look at it from a builder's perspective, then I talk about latency and all of those things, but specifically for this panel, let's discuss compute as an asset class. Okay. So when I say compute as an asset class, how can a retail investor or an institutional investor participate in this economy? So we did this pool with EigenLayer where retail investors can invest, provide liquidity, and that liquidity can be used for cloud hosts for staking on the network, right? Thereby giving people a chance to participate in the Debian economy. But from your vantage point, so maybe we start this with Andrew. So from your perspective, uh, from an investor's point of view, how do you really price compute, and how do you take care of things like this variability in demand, verification issues?
And so number one, it starts, to truly build and have like a real pricing. You can do it only by being fully decentralized. You aggregate capacity from potentially hundreds of independent players, could be institutional back, could be more retail. They list the price, and you have demand, and demand determines the price. I kind of like to oversimplify it. Whenever whoever can figure out to bring liquidity to something that is illiquid, you make industry significantly better, and specifically around the compute. Our focus, again, we're focusing on that sort of creating like a spot market, taking advantage of all idle GPUs. And I can give many examples where we have very large consulting company as a customer, and they committed to a very long-term contract with major hyperscaler. And in Q3, Q4, they have significant spikes of compute. They need more capacity, and there's just nothing available. But in Q1 and Q2, they're slow. So they're trying to find a way, like I would like to monetize on a compute we're already paying to some major well-known hyperscaler. So again, where we come in, again, if we can figure out to continue injecting liquidity to something liquid, that's how you determine the price. And it's only possible by having like a real-time sort of auction and have like a real-time spot market for like flexible compute. And that's where we come in. If you look into like the last piece on an asset class, I think the most interesting example in our space being CoreWeave. They invented financial engineering of compute and GPUs financing from all of the leverage. So basically companies are issuing tons of debt. There is very interesting and very risky deals that we're seeing right now on the neoclouds, how they finance. And some of the new guys just don't have access to capital as some of the bigger guys. Like, CoreWeave probably has the cheapest cost of capital today, and they're taking advantage. And some new guys, there's so many new players enter the space. And again, my bet that there will be thousands of new entrepreneurs entering the data center space and becoming GPU entrepreneurs. And it's also, potentially can create a lot of risk. So by us being that decentralized asset-light marketplace, again, I think we have the most stable business model. Like hypothetically, if you want to have 1 million GPUs in your marketplace, to finance those, you need $25 billion. In our case, we don't. We just take advantage of all idle compute that already sits between some well-known people and maybe some new players that just don't really have go-to-market strategy. That's kind of our view, in my view.
Yeah, no, I think that's interesting. So in free markets, of course, invisible hands of the market, they play a role in determining the price of any commodity, right? But especially maybe Raj, you can shed some light on this. In case of something as complex as a GPU, which itself is not something, so it has to sit in an environment, it has to sit in a data center. There are 100 different components which define the price of that GPU for a builder also, right? So that's still simple, right? But when you look at it from an investor point of view, who wants to build a portfolio of GPUs, because strategic compute reserves, when you look at it from that investor's point of view, how do you ensure that standardization? How do you ensure that a data center which is located in XYZ country, it actually holds the assets that it is advertising, right? So how do you ensure and how do you solve for these challenges?
Yeah. So I think one thing which you have realized at IO.NET working in the GPU space for so long is price discovery is actually a very big issue in this space because a lot of these deals which happen between data centers, AI startups are not happening on chain, are not happening in a very clear way where you see, for example, I'll give an example. So in India, there's a major data center and close to 90% of the inventory was bought by the Indian government because of some AI project they had. But this price discovery did not reflect in the price of those GPUs in that country. And that is where we do need some Oracle kind of systems where the price discovery at a country level can happen. Once we have the price discovery, I think then there are many blockchain related solutions that can help investors access this price discovery. So the two simple ones which I am aware of is one is stablecoins. There are a couple of experiments happening where compute becomes like a reserve asset for a stablecoin. And then essentially that stablecoin starts being used in the whole AI space within whether it's Web3 AI, Web2 AI, that does not matter. Because anyone who wants to access AI, they need to have the denomination at a compute level because that's what powering AI. The other major product which is very common, very well known is buying futures and options. This is very common in commodity trading for people who are aware of. So, for example, coffee prices vary based on rainfall across the world. Because if there's more rain, then the coffee crop may get spoiled. And people buy like Nescafes of the world, buy future options so that they do not get impacted by that price. To the example which was mentioned, like if I am an engineer, I have a high dependency on compute today. I will prefer to buy a future dated option so that I do not get hit by that price impact in compute. I do not want to compete with the government spending a lot of money in my country for the compute also. So I start buying futures, I start buying options, and I start managing this as a portfolio. And more and more enterprises start doing this. Retail investors will also see this as a good product to hedge on because that is how commodity trading involved, that is how stock market futures and options involved also. So you first see enterprises coming in to hedge their risk. Once they start hedging their risk, so the counterbalance of this market will be typically bought in by retail users. So that is how I see this can be monetized in a very interesting way.
And I think for monetization, tokenizing the underlying asset is probably, and there can be multiple ways of doing that. Is probably the only viable thing to do, right?
Correct.
So YQ, maybe I'll pose this question to you. So when it comes to tokenizing something as complex as a GPU infrastructure, what do you think can be some plausible approaches to do that?
So in my opinion, there's multiple ways, right? You just mentioned one way, like we just have this marketplace, right? And the people can just buy or sell like sort of the power they have. And on the other side, since we are in crypto, there's multiple these financial tools we can use, like for example options and also perpetual all these kind of assets. Especially recently, apart from the pure native tokens, right? We also onboard a lot of these RWAs, and I think GPU definitely some assets we can basically put into this RWA sort of category. And beyond that, recently we saw some projects. They also launched stablecoins using this kind of a GPU lending as part of this collateral as sort of the source of yield. It's also another way, not just like to directly tokenize these assets, but we can leverage like sort of these assets to generate extra yields. And on top of that, I just feel like not just about assets we have around these GPUs and also these AI infrastructure. Recently, there's a bunch of these agents, especially trading agents. They can help people to do this asset management. Of course, it's not directly associated with the physical assets on the sort of AI infrastructure, but at the same time, it also like sort of on top of the infrastructure we have, they can basically provide a very autonomous way to manage the user's assets, no matter it's RWA or even like sort of the pure virtual assets, in a like sort of autonomous way. Basically, instead of like human to curate like sort of your all the different yield pools for the retails and also investors. Now we have some agents pretty smart and intelligent. They can also handle this kind of strategy, asset management strategy, or even this kind of trading strategy for different user. Of course, you can choose like whether it's a high risk or even some low risk DeFi, like for example the stablecoin like airdrop or this kind of farming pools. As I mentioned, right, it's just all different ways from these physical assets like marketplace, tokenization, and also all different lending, borrowing protocols. And on top of that, we also have these extra, this kind of trading agent or asset management agents, basically help users and retails to manage their portfolios.
So I think, Jianshu, the next question, which is like very closely related to what we just discussed, right? So this asset class, or overall, like if you look at RWAs, there is the biggest challenge that we have is the liquidity, the dearth of liquidity, right? Overall, crypto liquidity is fractured across different chains and ecosystems, and within that also different sectors they capture, or they further fracture the liquidity, right? So how do we, what do you think is going to be that inflection point where people start realizing that this is something which is probably much more long term, from an investment point of view?
Yeah.
Yes.
I think there are still some barriers for the computing to be asset class. I think it is on the way to that direction, but computing is not as a commodity or as assets like oil or gold or all this yet, because it is not standardized yet. So just compare the coffee versus tea, right? Coffee is such a big commodity, but tea still today is so a fragmented market. There is no global commodity trade for tea, just because tea have so many different types and so many different flavors. And I think the compute is just like tea. You have completely different computing infrastructure for mining Bitcoin, for example, or for AI. Even for AI training and the inference needs a completely different set of infrastructure. So when we talk about compute, we're not talking about the flops or some abstract ability. It's a combination of the hardware, the GPU chips, the software to orchestrate everything, the network and the management, everything combined together. And it differs from data center to data center. So you just cannot move computing, especially those highly tailored training and inference from one computer data center to another very easily today. I think this will change in the future, just like Kubernetes changed the general computing, but it takes time. So if it is not standardized and the computing power we are talking about is not fungible, then it's still a very far long road to reserve asset. So I think it has all the demand for the computing power to be the reserve asset, but there are some reality problems that we need to solve before it really become an asset.
Yeah, and I think to add to that, there are counter arguments, right? That compute itself probably is more. And you, Raj, you also said like it is becoming more of a commodity, and the value lies at the orchestration level. So though I don't fully agree with that viewpoint, but still that's an argument which is a lot of times thrown around, right? So I just open this up for all of your views. Like, so for you, is it more like a commodity or is it more like a reserve?
I would say reserve.
Yeah.
From an engineering perspective, it is so critical and so unpredictable. You just cannot afford to let it go and then see the luck, right? If you are going to, like, if I'm coming here for the panel, but I'm not sure whether I have a Mac or not, I won't say Mac is a commodity today. It's a reserve. I have to reserve one before I came here, right?
So I would say his example of tea is quite good actually. So compute cannot be seen at a global level today because it has a very local flavor to it. The local flavor is the local demand, the local cost of electricity, and the local regulations that also spike the price and demand. So it's very similar to, like, if I use Uber example, the price of taxi in one country cannot be similar to another country's city. But in that city's perspective or in that region's perspective where there's some standardization of cost electricity wise, I think it can work as a commodity there. Where so if there are 5 data centers all in the same city, will it matter to you if the same machine is coming from each of these data centers? So I think that is where it becomes a commodity, and maybe at a global level, it stays a reserve, as you mentioned.
Yeah, I think that's an interesting one because there is so much difference between people who have this asset right now and those who don't. And if you don't, you are basically out of AI game, right? So yeah, so YQ, maybe what's your thought on this?
So I've been working in crypto over a decade, and since day one, like we all know that most of the validators, even for the most decentralized protocol like Ethereum, like I would say more than half of the nodes running on cloud. So I just feel like no matter it's like for GPU or typical machines, they are really commodity, especially like before the blockchain. Like we have all different marketplace, right? AWS already have this kind of resell for all the instances on their website. But at the same time, I just feel like especially for GPU audit services, typically the target audience is not that big. I mean, for retails, like we don't really directly buy or purchase GPU for training, whatever, right? Typically, we will just use some ChatGPT or kind of these chat apps, and then behind the scene is sort of the data centers. So in that case, like the marketplace is typically targeting the developers and also these kind of AI companies. It's sort of like more like B2B to C. And back to the point, like beyond this commodity and regarding the liquidity, I think it's really because right now the market is relatively bad and we don't have much liquidity in the space at this moment, especially after this October 10th like, sort of crash of the market. So that's why like not just for RWA, but in general for the market itself, even for the most liquid token like Bitcoin or Ether, in general the liquidity is not good enough. So if we really want to see okay how the market goes, probably next year, if there's a QE whatever, we can see that if the liquidity back to the market, and then I think that's the best timing to evaluate whether we have enough liquidity for RWAs or in general for these kind of commodity services. Yeah.
Well, I think that's an interesting one.
I think I have like slightly different opinion from most of the players, but number one, I would like to say that it seems like compute is becoming what oil was in this kind of post-industrial revolution, and compute is becoming incredibly strategic, not just to your sovereign strategy, but also to different political campaigns and how it's leveling out the playing field. We've seen specifically in US for 2026 election, a lot of campaigns already basically focusing on securing capacity, and that's how they're gonna, again, potentially outcompete some more well-known players. Number two, on the commodity argument, I'm seeing that some hyperscalers are actually charging 10 times higher prices for the same workloads, for the same training as maybe some newer places, right? Some even new neo clouds. So the prices are all over the place, and I think that's an opportunity for all of us to take advantage. And now specifically for the decentralized marketplaces, I think like we need to do a better job convincing and building credibility with enterprise clients. I think people are just not focusing enough on that, and that's kind of like our focus is. We're trying to build credibility. We're trying to continue, again, holding some people's hands and trying to close some major deals and show them why it's so much better. And example, again, back to, AWS is down a couple weeks ago. In the US, you simply couldn't even order coffee through an app, Starbucks app, right? So, and by educating Starbucks as a company, as a use case, if you use decentralized compute, and of course you can still, maybe it could still be based, let's say in US, or it depends where, whatever market you want to have it place the GPUs, again, system will automatically redistribute from one place to another. And it's just better and it's safer. So us educating them, again, that's just like my point of view.
Yeah.
And then the last one is, again, I think people kind of missing, I think the biggest also opportunity as a second asset class is the second life GPUs. Again, recently I had a meeting with NVIDIA. There's over 500,000 GPUs retired in the next 18 months. What are you going to do with them?
Yeah.
Where platforms like XAI, OpenAI needs to physically rotate those GPUs, right, and do something with them. They just cannot mess on not accepting the new ones. And so again, by focusing on second life GPUs, again, that's how you drive compute costs down. You kind of maximize accessibility and affordability. That's just how we think about it.
No, I think that's an interesting take. So as we are about to close this discussion, so I have this one very practical question, right? So let's take a role of an asset manager. So just suppose that you are an asset manager, right, and you have to build this portfolio of compute, as a reserve asset. So what do you buy today? Like, do you invest in manufacturing companies? Do you buy compute tokens, or do you participate in a staking pool which is based on compute? Like, what's your mental model here? So maybe we start with you, Andrew, here.
Your question is around how you get involved?
Yeah. How do you create this portfolio of compute? What different avenues do you have to participate in this now as an investor?
So as an investor, there's interesting, use case right now. You can look into like Valor Equity with Gavin Baker, who just recently launched the second life GPU fund, right? That's just like how they're approaching it. We see a lot of companies that just get involved specifically in GPU financing and data center financing. Again, there's like all over the place. I'm not sure how people will take the biggest advantage of it. How we actually think about stuff, how can we incentivize to create this new economy of GPU entrepreneurs globally? How do you continue converting all Bitcoin miners globally into compute miners? And now the most important AI infrastructure stories today is what? CoreWeave, Crusoe, that became worth $40, $50 billion companies just in the last couple of years, just by simply on time, converting into compute, right? Into AI infrastructure stories. So again, we need to do a better job incentivizing people, helping create this new economy, I call it, of GPU or AI entrepreneurs globally. Again, focus on AI infrastructure. And I think people will continue kind of realizing, maybe you couldn't get involved in oil 100 years ago, now get involved in compute. I think it's even more strategic.
Yeah.
For me, I feel like there's multiple layers, right? One is like definitely in the chip maker companies. The US stock market. I mean, either the CPU or RAM or even we all know the disk, right? So these are all, the good sort of targets for the investment. The second thing, if sort of later on the sort of the decentralized AI, the entire market will grow a lot, probably next few years. I feel like even we couldn't predict what kind of agents can be sort of super popular hyped for the next few years, but at least we can start to put some sort of investment into this kind of AI infrastructure companies, at least who are providing these SDKs or infrastructure for these agents. So that's something especially right now in the market, like most of these companies or these valuation are pretty low at this stage. For me, I feel like it's a good entry point. Yeah.
Thanks, Raj.
Fair. So I think I will start with do your own research as a disclaimer. But I think when I think about as an asset manager, because of the diverse nature of this industry, so I will probably segment this into 4 categories, and I think people can decide their percentages. So the first category is whoever is making the actual hardware, which comes down to something like NVIDIA or a TSMC kind of a player. Then I think the second part is all the ancillary things required to power a data center, like water, which is required critically, electricity, which is required. So I think utilities will become very cool now because those utilities have a captive demand already being set up in all of these geos. Third would be any form of debt financing to data centers, which has probably a good way to depreciate machines because these machines will not be like cars that can be depreciated over 5 to 10 years. These machines may need to be depreciated based on NVIDIA's new machines coming out. And lastly, I would say, coming back to how I started, the orchestration layer, which is anyone who can help access the latent supply, whether it is decentralized players like yours, mine, all of those. Anyone who can critically show like they can achieve scale in accessing the latent supply, I think that will be where the value accrual will happen. So that will
Yeah.
be the 4 breakups for me.
Oh,
Yeah.
that's interesting.
Yeah, for me, I
Jianshuo?
think as an investor, we have to today. I mean today, not future. Today we have to invest on something related to compute, but not directly to the computing power, just because of the standardization problem we just mentioned, and also it is a time bounding. We think it is like a reserve asset, but it's not like gold. It's more like energy. Like I can reserve gold. I put 1 kilo of gold on there in my safe and keep it for 2 months, 2 years. It's okay, but you just cannot keep compute energy like that, right? It's just like energy. You cannot store it. It will go away very quickly. So at that time, maybe we should invest in the shares of NVIDIA or the shares of AWS or anything that you can keep instead of the computing power right now. I think in the future it will become something like a commodity, like energy or anything that you can invest very easily. But now you just cannot invest without a lot of operational experiences and effort. So other people can do that, but it's not for normal investors to get into the computing power businesses.
Yeah. No, I think one thing is clear that there are a lot of challenges, standardization, verification, etc. But having said that, I definitely see compute emerging as one of the top asset classes. Compute reserves are going to be important, for nations, for enterprises, and there are various avenues available even today for investors to take their positions in this space. Uh, for me, it's not a matter of if, it's a matter of when. So with that, I would like to wrap up this panel and thank you all of the panelists for sharing your insights and thank you all for listening.
Thank you.
Thank you.